The US currency is extending weakness. Its index dipped to 97.43, that is 90 pips lower than the closing price on Friday. Wall Street is trading on the positive note as investors are betting on the rapid recovery in the US economy, neglecting the violent clashes in major US cities. The market is alert to ADP National Employment Report and the policy meeting of the Bank of Canada. A report on the US labor market cheered up investors today. The number of jobs in the US private sector contracted 2.76 million in May, whereas the economy lost 19.5 million jobs in April. Such a notable improvement came as a pleasant surprise to investors. The consensus suggested a decline to 9 million jobs. The US stock indexes accelerated their rally this trading week. Futures on the Dow Jones gained 0.9% to 25,930. Futures on the S&P 500 rose 0.55% and touched 3,093.88. Investors shrugged off coronavirus worries and the trade conflict between the United States and China, thus adding to the overall market optimism. Meanwhile, Washington announced plans to ban passenger flights by China's air companies to the United States starting from June 16th. In fact, it's not quite clear what is the right stance on the current situation. Economists foresee grave troubles in the future, speculating on new stimulus measures. At the same time, investors' optimism is not justified as they seem to beaten by the buoyant buck following the downturn in March. The US dollar has already incurred heavy losses amid prospects of further stimulus measures from the United States government and a recovery in the global economy. Such confidence encouraged traders to increase bets on risky assets. The US dollar index was trading at near 97.50 in the early New York trade, having shed 0.15% from the closing price yesterday. The Bank of Canada maintained the key policy rate at 0.25% as expected. As for the policy meeting, traders are mostly interested in the comments from the regulator. Any unexpected statements on further monetary policy could trigger a surge in volatility in the Canadian dollar and, therefore, in the USD CAD pair. Meanwhile, it's trading at the level above 1.35. Like other commodity currencies, the loonie finds a solid support from the rally of oil prices. However, the rally in the oil market has stalled today in light of the news on the OPEC Plus deal. Citing Bloomberg, delegates encountered some disagreement, so the cartel and non-OPEC Russia might not reach the decision to extend the oil production pact due to poor compliance with its conditions. In response, Brent crude retreated from earlier gains to $40 a barrel. Before the publication of the official data on the United States crude inventories, August WTI contracts were trading at about $39.30 a barrel. July WTI futures slipped for a while, but traders rushed to buy futures on dips. The price again approached $37 a barrel. Weakness of oil prices seems to be short-lived developments of a speculative nature. The main thing is that Russia and Saudi Arabia settled the standoff and are poised to extend the ongoing pact. That's all for today. We continue to learn developments on financial markets. Subscribe to our channel and keep abreast on the latest events with us. See you tomorrow.